It's Monday the 10th, I'm FX Blue and this is CurrencyTransfer.com's market update. And the headlines today are that jobs and wage inflation data help push the dollar higher, sterling rallies on the next Barnier offer, and there's no change expected from the Bank of England or the ECB this week. So the dollar index touched 95.45 on strong employment data, which added to the trade war concerns, providing support to the dollar. The headline number was 201,000 new jobs created in August, and I lost the sweepstake again. The real surprise came from average hourly earnings, wage inflation data, which rose to 2.9% after 3 consecutive months at 2.7%. This has provided the FOMC with ammunition to hike rates later in the month when they meet again. It's not 100% clear that they will. However, it can be argued that Chairman Powell is more likely to act now that there is clear evidence to support another hike. The weekend press quoted Boris Johnson as calling Theresa May's Brexit plans a suicide vest for the UK economy, no doubt the latest step towards his widely expected leadership challenge in the coming weeks. As Brexit negotiations, they rumble on with no real sign of progress, and both sides are becoming more firmly entrenched. That said, Michel Barnier reportedly offered to look at further proposals for a backstop ensuring an open Irish border following Brexit. Although taken positively by the market, the border issue is so black and white it's hard to imagine an acceptable proposal to all sides. The EU of course face the threat that Dublin will veto any proposal that leads to a closed border, whilst the Democratic Unionist Party will withdraw support for Theresa May's minority UK government if the Northern Ireland is treated any differently to the rest of the UK following Brexit. Cable rose to 130.30 on Barnier's comments, but fell back towards 129.15 after the non-farm payrolls. This week we've got both Bank of England and ECB meetings. Neither is expected to change their monetary policy, although the ECB may provide some further details over the timeline of the reduction or removal of their asset purchase scheme. Eurozone Q2 data released on Friday was 2.1% year on year, so solid if not unspectacular, so should see the ECB maintain their position of no change to monetary policy for the next year or so. The German economy, however, is beginning to slow, and if the ECB feels that there's any risk that this could spread through the region, then Draghi has already hinted that he may delay the withdrawal of the QE. Euro fell against the dollar on Friday, touching 115.50, and also fell against sterling, closing at 111.85. If you've got any questions, please pop them in the comments below. Otherwise, I'll see you tomorrow.